Stock market double dipping. Hi, I'm John McNeil, and this is the Invest Strong Network. Welcome. So in 2022, the stock market has been on a real roller coaster ride. And as any investor will tell you, a double dipping in almost any context is a terrible thing to have to endure. And this is particularly so when it comes to portfolio investing. All right. Now, for this particular vid, I'm going to review basically my own portfolio, which is a reflection of the broader double dip in the stock markets plural this year. All right. So let's get right into it. We'll start off with the S&P 500. Now, the S&P 500 started 2022 at 4,677. Now, over the course of the next 6 months, it would then slide down to a nadir of 3675. That on the 13th of June 2022 for a loss of 21.3%. Now, unfortunately, that was just really the first leg of this downturn, because over the next 2 months or so, the S&P actually gained about 16.5%. Okay, well, that's great, making up for a lot of the loss of the earlier months. But then Fed Chairman Jerome Powell came out with an extremely bellicose and insistent speech at the Economic Summit in Jackson Hole, Wyoming, saying that basically the Federal Reserve was going to do whatever it took to bring down inflation to the 2% historical range, as it has been really for the last quarter century. And that if that means driving the nation into recession, well, hey, we're just going to have to endure the pain. That speech basically sent the financial markets into a tailspin, which until very recently would knock about 9 to 10% right out of the S&P 500, right? So that's the double dip. Now, as tough as it was in the S&P stocks, the real devastation came in the NASDAQ. And the NASDAQ began the year at 15,600. It then suffered just a nauseating sell-off of almost 31%, down to 10,800 in the middle June area. Recovered incredibly, very smartly, recovered about 21% until August, and has then been knocked down by another 12% on the second leg. Now, me personally, my portfolio is hanging in, right? Obviously, I would love to see the end of this bear market. And this bear market has dragged on for a while, as of course it would be whenever the Federal Reserve is increasing interest rates. But the protracted nature of this sell-off has been added to by the war in Ukraine and also financial crisis in China, which may begin to spread to other parts of the world. And so right now, economists are predicting a global recession come 2023. Now, would this portend to a third sell-off, a triple dip, as it were, that would send stock prices to record lows? That's possible, but I don't think so. Let me tell you why. This current stock market, I would really compare to two other sell-offs in the fairly recent history. The first sell-off is the great financial crisis sell-off of 2008 to 2010. So the stock market, will use the S&P as the benchmark. The S&P basically lost about 35% on the first leg, recovered quite a bit by late 2008, and then collapsed down to about a 50% sell-off by March of 2009, and then began the rather long recovery that we enjoyed basically until 2018, December. Now, the second sell-off is that I would compare this to is the CV19 inspired great sell-off of February through March and into early April of 2020. Now, in that instance, the stock market basically had about 40% knocked out of it because of the pandemic, recovered a great bit of it by the summer of 2020, suffered a much more modest second leg down in the late summer of 2020, and then recovered to basically roaring fashion up until really the beginning of 2022. So which one of these comparisons do I think our current market really looks more akin to? In my personal opinion, from examining it carefully, I really believe this particular second leg sell-off is much more akin to the CV19 inspired sell-off, right? A huge shock causing the financial markets to sell off. And in this instance, we basically have two shocks. We have the rising in interest rates to combat inflation, that being one shock, and then the war in Ukraine, which has just roiled the economies around the world. Fuel markets, food markets, everything has been turned upside down by this thing in Ukraine, and how it's potentially spreading its economic effects into China, second largest economy in the world, right? That actually has lent a lot of money to Ukraine, Russia, and Belarus, right? And it's beginning to look like they may not get any of that money back, which puts China in a tremendously precarious situation because they have a real estate collapse that they're dealing with at the same time, right? So those two double wallops, just like the CV19 pandemic in early 2020, has rocked the markets so far. Come back, second leg down, but I think we may have seen the worst of the second leg down, because the Federal Reserve has said that they are close to reaching their targets on interest rate increases. Inflation has come down markedly over the summer, right? Both commodity prices, fuel prices, all of that has come down tremendously. Eventually, that will spread to food prices and other things. And with China struggling now, the global economy will begin to slow, which will also contribute to lower inflation. And Russia is really kind of getting their tail kicked in Ukraine, which portends to me that the war over there may be over before the end of 2022 or the summer of 2023. These are all great signs for the market going forward. So myself, I'm basically kicking back, riding out the storm. I think we'll be fine on the other side, right? And this other side may take a while, may take a while to get there, but I'm very, very confident we are going there. All right, so that's my stock market review and portfolio review for my investments for 2022. My losses, by the way, want to mention this, have been paired by the fact that most of my holdings are dividend paying stocks. The dividends have gone a significant way, and I've noticed this, towards modifying the price losses, right? So I've been getting that income that has kind of modified the price losses. And so that's always something to take into consideration. All right. If you found this video informative, instructive, hit that thumbs up button. I'd appreciate it. Thank you. Also, let me know how you're doing with your portfolio. Please leave a comment. I'll respond to each one. I promise. And subscribe! Subscribe, please, to Invest Strong, and we'll take the triple dip together. All right. Thank you so much, friends, and good blessings.